Will there be a China deal? And what does the drone bombing in Saudi Arabia mean to the price of oil? What's up, everybody? Welcome aboard. It is Bubba's Bottom Line for Sunday. What the hell day is today? September the 15th, 2019. What's going on, everybody? A pretty dull week as we just came out of, and of course, obviously over the weekend we had a little drone bombing from Iran into Saudi Arabia, wiping out a lot of the oil, and of course, all the experts and pundits are predicting $100 oil again. I don't know. I mean, I'm certainly not I'm not unhappy today that I'm long oil right now. But if I were to guess, and if we do open significantly higher tonight, I would probably be more inclined to want to sell a little bit than buy. Again, we'll see what the overall effect is based on the bombing and what's going to happen. And of course, remember, we're talking about two different types of oil. It will affect our oil here, but I'd like to see what's going to happen. And if they get too crazy, then certainly you're going to probably want to give them some. This will create a blow-off action. So we'll see. Again, I've read anything from $2 to $5 higher to $10 to $15 higher to $100. Well, we're at 54 now, or 55, wherever we're at, and we'll see. Again, this is always going to be interesting how this news does play out, but you can bet your you-know-what that it will be overbid to begin with. Okay, what it does from there, we can't tell you, but you can feel the shrill and the panicking coming from anybody who is short oil coming into this, and then we'll see the additions, but I would expect to see at 6 o'clock Eastern some heavy volume and some big price movement. And then, of course, from there we'll see. But again, if they get too carried away, certainly I will give them a little bit of help and unload some of my longs possibly. Again, I look at it always as this being an opportunity to give some away, okay? But we'll see. Again, I don't really know what the actual effects will be over long term. To me, it doesn't mean a heck of a lot, but certainly I will watch the tape. I will watch the trading action. And again, if they get a little bit too excited, I'll give them a little help out. But I think as we look around and see what's going on in the world, of course, last week we had all kinds of news. And of course, there was early in the week, there was the talk of China and a possible deal in the works. We know there's not going to be a deal right now. But I think one thing we might have learned last week is that as much as the left hates the president, I think they all stand together on these China tariffs and whatever that could precipitate a deal earlier than we had thought originally. Everybody believes that there will be no deal now until after the election, because China figures out that they could wait and see who the new president was going to be, if there was going to be a new one, which we don't believe there will be, but if there was. And of course, based on the debate, you would say that they don't expect to see a change here in the sanctions and the tariffs of what's going on. Now, again, obviously that can all change tomorrow, but as it looks right now, so there may be a deal. Obviously, there's been some workings, but I think the real thing to really watch is the action of the grain markets, which I think tell more to the story than the stock markets. Again, the stock markets came close to hitting record highs, and we'll talk more about that in markets. But again, the one thing to remember is there's no place else to go. So that is the other reason we're seeing a big rally here. But again, I still believe that we are in the very early stages of a recession. And of course, you had the ECB, Super Mario Draghi, going out with his swan song, and as I said on CNBC Asia last week, with guns a-blazing, reducing interest rates 10 basis points while initiating what I think is $20 billion a month in an additional QE, quantitative easing. Okay. Now, again, we know that the entire the entire the eurozone, Germany, the whole, China, Japan is in a financial crisis. Of course, Japan has been there for 30 years. I mean, they are the original initiators of these ridiculous programs of quantitative easing. And again, it's amazing how we think that we can fight off a recession, okay, when eventually they show up anyways. And I think this is where I always have the problem. It's like a Band-Aid. Why don't we just rip it off and let it happen and go and move forward instead of delaying it? I think the more you delay, the more damage that you do to an overall economy. I think the longer you delay, the more damage you do to the people that can afford it least. But we'll see how it plays out. And of course, we've got the Fed this week, which we'll talk about a little bit later in the show. And we'll see what they do. But of course, you also had the USDA report, which was rather benign. And of course, I haven't read it, but I'm only basing it on the price action that I've seen. But I think one of the big concerns, I would say, in my opinion, is I believe that based on the things we're seeing, that we have U.S. consumers are at maximum leverage. And in other words, they've borrowed themselves, they've leveraged themselves up as much as they can. Okay, who is going to continue to be the buyers? We already know the upper class, the wealthy have really stopped participating and overspending on nonsense. I mean, obviously they're going to live their lifestyle, they're going to fly their private jets, they're going to do it, but they're not really out there running, and you can see that through many of the results of a lot of the high-end retail and whatever. But of course, the middle class, the pie of the month society, I think have leveraged themselves into oblivion with everything, and I don't see how that's going to change anytime soon. Okay, I mean, I don't think that the Fed or any central bank, okay, can stave off the global recession, which is in full-blown force in the East. So again, can it be done? I don't think so. I mean, do you? It doesn't appear that that's ever been able to be the case. So why would I expect this time to be different? Although, if you watch the pundits and the imbeciles on TV, they will continue to tell you that this time is different and that things don't matter anymore. And I go, okay, well, whatever. Again, I can only base my opinion on history. And in history, it's never been different. So I would not expect this time to be different. I don't think they figured out a way to avoid the economic damage that just happens. Okay, I think especially when you've seen since the election of President Trump, you've seen over 1 million households climb from poor into the middle class, and of course, when you get there, you want to spend, you want to enjoy your class. And of course, again, this goes back to the massive amounts of debts. And of course, we've got, record debts. Okay. We've got record debts in new cars. We've got record debts in credit cards. We've got record debts everywhere. And all of a sudden, we have delinquencies starting to show up. Now, again, we always talk about that markets don't announce themselves. So they just don't say we're in trouble, but you can start to see some of the bricks falling out of place, okay, when you start to see delinquencies. And I'll bet you that we'll start to see some delinquencies in home payments as well. Again, recessions don't just show up one day, okay? Problems in economies just don't show up in one day. They build over time. And the more work that organizations try to do to prevent them, okay, it usually creates the bigger amount of damage. Again, it's like trying to plug a hole in a sinking boat. You plug one leak and it leaks somewhere else. And I think that's really more the case of what we're going to see here is the constant plugging of holes that eventually they've got to give way. And that's why I think that is where the Keynesian versus the Austrian style of economics is different. Again, I don't believe that either one is significantly better than the other. I believe that a blend of the two would probably work the best. Of course, the Keynesian are too stubborn on their side, and the Austrian are too stubborn on their side, and that's just the way it goes. So that's how we live it. But in the meantime, I believe personally that if they could blend the two together, but the one thing that I think should always happen is if we're going into a recession, let it happen and get it over with versus fighting it off and creating that much more damage when you get through. So, again, I think that also suggests and indicates a lot of trouble. Now, we've seen a dramatic rally in the bond market. Okay, of course, the futures, have now gotten slammed last week, and again, we'll talk more about those. But again, interest rates. Okay, the 10-year was down at 150. The entire talk of everybody was, oh my God, the yield curve is inverting. What are we going to do? Chicken little. Let's go hide. And of course, all of a sudden, that's no longer part of the conversation. All of a sudden, the 10-year is back to 180, okay, from 150, or actually it's 190, I believe. And the 30-year is back to 2.4. So all of a sudden, we're not hearing those concerns of the yield curve falling apart. So, what does it mean? Is the rally over? Are we going to see higher rates? Well, again, of course, the Fed will speak, and we'll talk more of that. Actually, that's going to be our commentary today, so we'll talk more about it in our commentary. But again, there's a lot of data out there that does not support a rate cut. Okay, so again, I think this could be in for a big shock. But I think one of the big ridiculous stories of the week is the Mrs. Monopoly game. Okay, that's supposed to create equal between men and women, and I have to say this, that I thought Monopoly was one of the few places that you were already treated equal. The game didn't know who was rolling the dice. Whether you were a girl or a boy, you got $200 for pass and go. You could build hotels. So, all of a sudden now we're making the games that children play politically correct based on some idiot's feelings. So now I guess the story is when a girl passes go, she gets 240. When a boy passes go, he gets 200. I have no understanding where the logic is in that. It makes absolutely no sense. To me, it's rather stupid. I mean, I can't believe Milton Bradley, if they're actually even still the toy company that builds these, would actually put this game out. But it's beyond me, some of the things that are going on in this country today. Anyways, so we'll see. In the meantime, this is Bubba's Bottom Line, Todd Bubba Horowitz. And of course, if you'd like to see any of our past webinars on hedging or futures or our equity portfolios, just go ahead and shoot me an email at bubba@bubbatrading.com. Would love to have you. And of course, we're going to have a new sponsor starting this week with Ticker Talker, tickertalker.com. Check them out. I do a lot of webinars for them, and they're live. You can catch them. And of course, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Let's get back to Bubba's Bottom Line with your host, me, Todd Bubba Horowitz. Let's get back to it. Welcome back. It is Bubba's Bottom Line. It is Sunday, September the 15th. And of course, every Sunday we get together and talk about what's going on in the markets. And of course, now that it's football season, it's even a little more exciting. We get to make a couple of predictions. And of course, we had the winner on Thursday night, which was always a good way to start off the year. But so here we are. Equities continue to plow ahead. And, of course, we continue to have light volume, light action. So what do we always tell you? Dull markets will continue to drift higher. It's that simple. Dull markets do not break. Dull markets do not collapse. Okay, so as long as they remain dull, you can assume they're going to drift higher. Now we made a run towards the new highs on Thursday before pulling back late. We're still obviously within a stone's throw of all-time new highs. I'm fairly confident they're going to hit the new highs, and we'll see what happens from there. Again, this is not exciting action, but it is a continuation of grinding action, and we are grinding higher. So again, is there a reason to step in front of this? My answer is, well, probably not. We don't like this happening. And besides the fact that we are long all four stock indices, the Russell, the NASDAQ, the S&P, and the Dow. Okay. So again, obviously we have been under some benefit of these conditions. Do I think we can go up forever? Of course not. But I do believe you will see new highs. And I'd like to see the action around those new highs. But again, if you remember that there is nowhere else to go and that money is going to flow into the United States stock market versus others right now for that very reason. Okay. So that's what you have to continue to look at is that overall premise. Now, of course, oil, we talked about this on the open, but oil, we're long oil and I don't like it. I still don't like it. I mean, obviously, I think we're going to catch a break here with this bombing or the drone. I guess it's the drone bombing in Saudi Arabia. And again, there's big talk of huge numbers for this opening tonight. We'll see. Again, we're long anyways. So again, I can't complain. I don't think it's going to open lower. I'm sure it's going to open higher. But again, certainly if I wasn't already in, I would not be buying into this. This is going to be, you're going to see, I believe, a major form of what's called backwardation, which means that right now you're either trading October or November oil. I'm going to tell you that this December oil and January oil will be most likely $1 to $2 underneath in price, which is not the correct relationship. So what this is telling you is that whatever this move is done in the next tonight, maybe the next few days. Again, I can't give you an answer. I can tell you that if it's a big spike, I'll look to be a seller. But I can't tell you where we're going to go. But I can tell you that this is a fear-based market that's being driven, and on no other reason. So you're going to see wide divergences going back, and oil is going to be much cheaper. In fact, I would almost bet to say out in, let's say next June, oil might be $5 to $10 cheaper than the oil you're going to be seeing trade today, which is not correct. It should be the other way around. But in the meantime, it'll be what it'll be, and it'll trade how it's going to trade. But be aware that it could spike fairly regularly. And of course, gold, all of a sudden it became ugly. Now, again, it was an interesting close on Friday. Our level, we're still long, and we're not changing tonight. Our level is 1,500. We closed just below there, but the formation of where it is did not churn or click our algorithm to the short side yet. Now, I know it's like within pennies, but the way that it closed did not trigger a sell signal yet. So, again, we'll be long. Now, I couldn't tell you how I would expect it to react tonight off of this news. I mean, it could fall apart. It could spike much higher based on the fear with the whole oil crisis or whatever. But again, it is if you look at a chart, it is a key spot. You can see that it's consolidating right around the 1495 level over the last 4 or 5 days. So it is either going to show this to be a bottom and we're going to start to rally again, or it's going to be a spot it's going to break down from. Honestly, I would have thought we would have reversed already. So it doesn't look great, but again, we're in. And since I'm basically a mechanical trader, obviously I'm not going to fight it. And of course, the bond markets, suddenly, as we talked earlier, the yield curve is not inverting anymore. And of course, bond futures got absolutely hammered. Since the play-by-play, the minute-by-minute talk on the yield curve, which was about as dumb as can be, right? We've seen the bond futures, the 10-year and the 30-year, get clobbered. Okay, I mean they have just got obliterated. And of course, the 30-year was down like 2.5 points on Friday. And just to give you an idea, equate that to in money, that's $2,500 a contract. Okay, $2,500 a contract for every one that you had on to the downside. So now, again, is this a spot where it's going to bounce? Well, we're short, so certainly, I'm certainly not unhappy about the way that they've gone down. But again, it looks like they're going to go lower. So certainly there will be a bounce at some point here, but certainly they look like they're going to go a lot lower. And of course, this also ties into, what will the Fed decision be, which that's going to be part of my commentary. But again, think about this as we get to the commentary. If you look at the data, if you look at what's going on, how can they really cut rates here? Okay. It really doesn't make a lot of sense. Grain markets last week, they've been a challenge, and again, it's been very concerning. We've been short them, and we're now long soybeans, but we've been short them. Okay, so we've been benefiting from the downside, but they just don't look like they want to go much lower. And I think we did see at the end of the week, you had the USDA report, which is always a crap. But in the meantime, you did have a nice bounce towards the end of the week. And again, what I really liked about it, it was not a major straight up spike move. It was more consistent with holding some support before going higher. Okay, so again, it looks to me that the bottom is in the grain market right now, and I would expect that we will change our direction on wheat and in corn in the next day or so as well. Again, we've already switched in soybeans, so I would think that we will continue to look now to see if we are now going to be buyers there as well. And I would hope so anyways. I mean, personally, from my personal view, I do think they're going a lot higher. I think there's a big rally sitting out there. And of course, the meats, it looks like, the fat cattle, live cattle, and feeders have made bottoms. Now, both rallied up to, actually, I apologize. Feeders rallied all the way back up to some resistance, which no surprise, they failed a little bit on Friday. And live cattle, again, had been up a couple of days. I mean, it was down minuscule. I think the interesting story is in hogs. I mean, they have gone crazy. Now, again, have they gone crazy because of the possible trade deal with China? Because, China does need hogs. Or, again, I don't put a lot of stock into that. Again, we thought that they had come close to a bottom, but last week they were down limit. They had, I think each day had about a $3 to $4 move intraday. And one day when we did Bubba's Daily Update, they were down, and I said I thought they'd be down limit. And by the time I got back to my desk, they were up $1.50 from almost down limit. And then they were down limit, up through the expanded limits, came back down, and then closed up, almost the original limit amount. So again, they look like they have bottomed, and that's what we had thought, that they may have bottomed in these ranges. But I do think the ag space looks pretty solid. And certainly I'll be happy and looking for changes so that we can be long these markets. Now, we are long the feeders. Okay. So again, I'm not concerned. I mean, I'm never concerned because I'm trading mechanically anyways. But again, that would be, something that would be obviously good for us. So this week we do have the Fed speaking, okay, on Wednesday. But I think one of the things to look at is they call it the U.S. formation of small businesses gone negative. Okay, now this has been going on for, about 12 or 13 years that we've seen negative growth basically in the amount of new business coming out. And we had thought that would have changed a little bit with some of these, taking away some of these restrictions and some of these regulations. But again, it still comes down to that there is still enough of the onerous crap on there that needs to be eliminated to really help the small business. But you're seeing that should be a concern. Now, again, that we do not make predictions. Okay, so our prediction is nothing here except that this just pointing out a fact that small business continue to slow. Okay, that there are concerns, but that would be more consistent with me saying that I think we're in the very early stages of a recession versus anything else. So let's see what happens. We're going to step out here for our final break and come back with my commentary on, of course, the Federal Reserve. When we come back, this is Bubba's Bottom Line. Todd Bubba Horwitz will be right back with more after the break. Please remember, if you'd like to check out any of our webinars, you can do so just by emailing me at bubba@bubbatrading.com. Be happy to send them to you. They're all free to look at and see what we're doing. Also, new sponsor we got coming in, tickertalker.com, so be able to check them out. And of course, don't forget our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Let's get back to Bubba's Bottom Line and my commentary, of course. Welcome back, everybody. It is Bubba's Bottom Line. It is Sunday, September the 15th. And of course, every week I comment, and I got so much to comment on, but I really think it's time to talk once again about the Federal Reserve and what a ridiculous organization this is to begin with. Now, they are meeting this week, okay, and the street looks like it has priced in a 50 basis rate cut, okay. Now, I cannot see a rate cut of 50 basis points here based on the economic data that we have seen over the last couple of weeks. Again, could they do it? Of course they could. But I can't see it because, again, the data is much too strong. I could see a 25, but I think the shock will be that if they do nothing, I mean, the data is good enough to actually hike rates again. Now, they certainly will not hike rates here. The question is will they succumb to the president's pressure, okay, which I think so far we've seen that Chair Powell will not do so. But again, they aren't such an independent organization either, and some of their things could be politically motivated. The only case that I can make for them to cut rates, okay, is because they want to keep up with everybody else who continues to go negative, okay? Because remember, if you've heard of the carry spreads and things like that, so if I can go to the Eurozone and borrow money for zero and give it back to the full faith and credit of the United States government at 1.5, basically I've got a riskless deal at 1.5, okay? So again, you're looking at things that people take advantage of, and here is where President Trump is correct. Okay, you could lower rates here. Okay, because again, basically, if maybe you don't know, but we pay that debt. That is our interest rate that we are paying because when somebody buys a bond, that is guaranteed by the full faith and credit of the United States government. So we are paying that interest rate. Okay, so they could lower the rates on that basis. So on that correlation, the man is 100% correct. Okay. The problem is that if we just ended the Fed and let the free markets trade, we might get a better read on where interest rates are. But because all these central banks continue to manipulate rates around the globe, it creates a much bigger mess. I referenced earlier Japan. Okay. Japan topped out when they bought Pebble Beach for, I don't know, $300 million, whatever the hell it was, 30 years ago. This is going to create a much bigger problem. And of course, I think that it'd be better if you ended the Fed, but I think the Fed is almost compelled to not this meeting, but over time to bring their rates down, because again, all you're really allowing is people to rotate out from one into here, collect, no risk trade. I mean, how many times would you want to make that trade, right? How many dollars would you want to commit for no risk? You can borrow from A and loan to B, make the 1.5 in between. But again, this just shows you how clueless the Federal Reserve is in general and how we are in this position as well, which ties in to the rest of the central banks globally, which is just a horrible system when you allow groups to control the monetary system without the free market. It never works out well, and it certainly never ends up well for the middle class. So we'll see what happens. Wednesday will be the day. But again, it'd be very surprising if they cut more than 25 basis points. And I think I would fall off my chair if they cut 50. I would not be surprised if there's no cut. Let's see what happens. In the meantime, this has been Bubba's Bottom Line, Top Bubba Horowitz. And of course, I always thank you for being here. And we've got football today. We always put the night game out, and I forget who the night game is tonight, but it may be I don't know who is the night game. I don't. I'm gonna give you one selection anyways that I do like. Okay, I do think that Indianapolis is going to beat Tennessee. I think the first week we saw some difference. So we'll see what happens. In the meantime, have a great Sunday, everybody. Enjoy the rest of your weekend. Enjoy football. We'll see you back here tomorrow on Monday with Bubba's Daily Update. Have a great weekend, everybody. We'll see you later.